Good afternoon, all. CamelbackTrading.org coming to you this Friday afternoon, October 9th. We are looking at the SPY ETF's market profile here on Window Trader. And like a champion after the Olympics, the SPY stands alone. The SPY Bulls are stand alone on top, as after another gap that holds, that's two in a row, they are firmly above that weekly balance. They're in position to start heading towards the 350 level and deal with that huge trend day down from September. All three of those indices I think I spoke about this morning, the Russell, the NASDAQ, and the SPY and the ES closed above some critical levels that I thought they all should need to close above. So the bottom line is right now everything is in the bulls' hands going forward, especially in the ES and SPY, to attempt to get to the all-time highs. The one negative, again, today is the volume. Very light volume overall this week. So even though it's only one spoke on the wheel, it is a concern. But as of now, the weekly is up, the daily is up with two gaps as our main focus. Monthly is still in balance. Now, I did not trade today, and I'm probably not going to be able to trade next week. I have a problem with my account. I have to be switching. I'm leaving Charles Schwab, going somewhere else. So I want to do some due diligence over the weekend and into next week to see where I want to go with both my trading account and my IRA. So I'm probably giving myself some time to see how long it's going to take. Could be at least a week. We'll see what happens. But I can certainly go over, because as I did in my room, where I was looking to play today, and it wouldn't have been that much, just like yesterday, but it would have been a good day. So I'll go over where I would have. I didn't write down the exact ones I would have taken, but next week I will. Until I get my new trading up and running, I will write down exactly where I would have taken those trades and exited them. So we did open with a gap. The gap was pretty big. I said I didn't want to take a call play right away. Now, I said I probably would have taken a small gap, a small call play as we got to A's low, as, excuse me, the risk reward got better. It would not have been a big play because the risk was still bigger than I would have wanted. I would have wanted to see it come down a little more, but I would have definitely taken a 345 call play here, which would have worked out. Same in B. Even though B took out A's low and we're one-time framing down, I thought A, the odds of a trend day down were very slim with the indices up. And B, if we went lower, I would have looked to increase size and see if that's all they want to do is if they went down to fill the gap. So again, I would have taken a small call play here, either at B's low or as soon as we went back into A's range. Where would I have taken them to? Again, both of them, since we went back and forth through the opening 3 time frames, probably would have only taken them back to the opening, but they would have been nice trades. They would have paid nicely, whether it was 10 contracts, 15 contracts, that's what I would have done. I would not have done anything in C period. Now, what would I have done in D? Since we were 4 for 4 wide, I did say there's a nuance that D couldn't get the opening for the first time. However, once we took out B and C's high, I said that was a level you could have taken along, because all that was B, when they pushed down in A, B, and initially in C, those are just shorts again. So once you take out B and C's high, I expect short covering. So you could have taken a break of B and C's high. I'm not sure if I would have. Right? I tell you, I'm being as honest as I can. I'm not even trading and I'm being honest. I easily could have said, oh yeah, I would have bought it. I'm not sure if I would have taken that trade, because I think more for me, I would have wanted to see what happens at A's high. But you could have taken that trade. Now, what I would have probably done in E, and this might have cost me, when E took out, since D couldn't take out E's high, when E took out A and D, since we're 4 for 4 wide, even though we didn't see the opening, initially, if we didn't get any acceleration, I might have faded it. And we did not get acceleration initially. So I might have taken, again, not big, maybe a 20 put play. Then that headline came out and boom, it exploded. However, the first pop it got did come back right back down to where I would have been short. The question is, would I have been quick enough and would I have taken it off? I hope I would have, because on that quick pop, after not getting acceleration right away, that would have told me something's up. So hopefully I would have gotten out if I had taken it for at least break even. After that, once they ran up, now we have agitated algos. Made a new high in F, still had single prints, but then we couldn't get much. And I said to the room, well, now that G, we traded right in here, F, G. I said I probably would have taken a small put play at G's high just to trade in G's range, even though we're one time framing up. So if I would have done that, that would have worked. Now, I certainly would have took a put play because I told the room this is what I was looking for if H took out G's low and stopped the one-time framing, because I would have expected the single prints to fill. Now, if I took that play, I did not get much out of it. If we went back up, I know I'm pretty stubborn. So if we went back up and we only took out H's high by 4 cents and J's high by 4 cents, I'm not sure what I would have done there. I would have been out on the trade. Now, if it was only 20 contracts or so, I might have held on to it. If it was bigger, hopefully I would have learned my lesson from the other day and take that loss because I could always get back in. But regardless, I called and saw the market right because all we did was take out H's high by a couple of pennies each time. And then finally, J came down and gave us more. And then when K opened and could not even get near the high, it finally flushed out. Now, would I have been quick enough to get the afternoon pullback low? Because that's what I was looking for. That short was to set up my next trade. Weak longs, that's all this is. Weak longs after that pop, flushing out, fill the singles, and then get long, because then once they're out, we go at least right back to point of control. Now, that happened fairly quick. So if I didn't have a short position, I might have been able to get that long when it happened quick, at least a small one, because at the time, value was still low. It wasn't here. So again, I'm being honest. I wouldn't have taken my full position here. I would have looked for value low, which somewhere, I'm going to say right around where my cursor is. So I might have only bought 15 contracts. But again, that would have worked. Went back up. So that's it. I wouldn't have done anything in L, wouldn't have done anything in M. I did say I think the market's tight and I don't expect much out of L and M. And we didn't get much out of L and M. We're getting more out of N right now. Incredibly, we're getting more out of N. Triple Qs, on the other hand, held their trend day. Barely, but they did. Even though it turned out to be kind of like a P-shape, they go out with a price probe and now N's exploding higher. So, destinations. Upside. I'm only giving you today's because you should have everything else that I gave you this morning. So if you didn't get them, please watch this morning's video. 347.35, which is today's high and is also a weekly high. Downside. 9 wide at G's low, 346.52. I'm using K as an afternoon pullback low, 345.95. Today's low of 344.89, and then filling the gap, 104-point gap at 343.85. And then the price probe at 343.72 yesterday, and you should have the others on the downside also. Let's go to the charts. Let's recap the whole week. We'll go to the monthly for the first time. Not that much has changed, but we'll go to the monthly. So the monthly, firmly in balance. 2 months plus this month. No surprise. We said, I said the odds of us having an inside month are probably pretty good in the month of October, especially with the election coming up. Right? We had a huge range last month. So I wouldn't doubt we have an inside month. We'll see, though. It's balance. Weekly. What did I say? We need acceptance above this weekly high. We got it for now. We're one time framing up 2 weeks. We're above this weekly high. The next major destination is the all-time high. That's your next weekly high. So everything in the bull's court. Daily. One time framing up for 2 days. We came out of my 3-day balance, this balance, whatever balance you wanted to call it, we're out of it right now. Is the volume impressive? Not a shot. 45 million yesterday, 58 million today. Not impressive. Here's the last stumbling block to the all-time high. September 3rd. We have 3 sets of single prints. One of them is 200 points long. That's not going to be easy to do, especially in the fashion that we're going up on the slow grind with just retail traders like us, short-term algos taking it up. No long-term money, no volume behind it to get good acceleration. So if that stays that way, It's not going to be easy to do. So I think we should still test once we get this daily high, which we just missed. If we get this daily high and get into this, the 349, 350 area will absolutely be tested. The question is, how long will it take to grind away at it? For me, that's the next big question. Because unless we get a tweet saying the stimulus deal's off the table or something really, really negative happens over the weekend, this market right now is geared to go higher. Awesome week in the trading room. Come check us out, camelbacktrading.org. Have a great weekend. Rest up, and we'll speak prior to the opening on Monday.